I've always found it beautiful the way the universe expands. It's an intrinsic expansion, meaning that space itself is doing the expanding. If you stretch a rubber band, it isn't any single point that's doing the expanding, rather every infinitely small point. And this is how the universe expands, from everywhere at the same time. It's as if the universe is giving every quantum unit of space its own room to grow. Biomimicry is the use of the systems, models, and elements found in nature for the purpose of solving complex human problems. I guess the idea is that nature seems to have a wisdom that we've yet to figure out. And why is that? How is it that nature always seems to find balance? Never perfect equality, but balance. And the universe, order out of chaos. And yet we seem to struggle so greatly with doing the same. One could certainly argue that if all of the systems that we are so intimately a part of are interconnected with and operating as a part of a financial system that has been so intentionally designed not to achieve balance, that it would be nearly impossible for these systems and us collectively to achieve balance. After Columbus's rediscovery of the Americas in 1492, the world was colonized. And this map shows that today, it appears that almost every country in the world has achieved its independence, that we're free. But this is only because it's much easier to control a population that believes that it's free. These maps illustrate current slavery throughout the world. Now, it's one thing to claim that we've been financially enslaved by the banking industry. It's a different thing entirely when we all understand exactly how this financial enslavement has been structured. So I'd like to share with you, step by step, exactly how this works. See, my hope is that if we all understand it, then we can end it. And as crazy as it may sound, I believe it's completely possible. And although I don't think it's going to be easy to free ourselves and our financial system, I do believe the steps to do so are much simpler than we realize. I actually have great hope for the future of our financial system. All right, let's dig in.
By continuing a process of inflation, governments can confiscate, secretly and unobserved, an important part of the wealth of their citizens. There is no subtler, no surer means of overturning the existing basis of society than to debauch the currency. The process engages all the hidden forces of economic law on the side of destruction, and does it in a manner which not one man in a million is able to diagnose.
Keynes is absolutely correct. Our wealth is being confiscated through a continuing process of inflation. But what is inflation? See, when most of us think of inflation, we think of the exponential increase in our cost of living. But what inflation is simply the addition of currency to our supply. And by exponentially increasing our supply of currency, the result is an exponential increase in our cost of living. And here in the United States, the government does not have the ability to create currency. See, in 1913, the Federal Reserve Act gave the exclusive ability of creating currency to the privately owned Federal Reserve and central banking system. 3 years after signing this law, President Wilson said,
"I am a most unhappy man. I unwittingly ruined my country. A great industrial nation is controlled by its system of credit. Our system of credit is concentrated. The growth of the nation, therefore, and all her activities are in the hands of a few men."
The name Federal Reserve is very misleading in that it sounds like it's part of our government, but it's not.
Most people think the Federal Reserve banks are the United States government's institutions. They are not government institutions. They are private credit monopolies which prey upon the people of the United States for the benefit of themselves and their foreign swindlers. We have in this country one of the most corrupt institutions the world has ever known. I refer to the Federal Reserve Board. This evil institution has impoverished the people of the United States and has practically bankrupted our government. It has done this through the corrupt practices of the moneyed vultures who control it.
Now, I'm not saying that governments are innocent and the appropriation of our taxes isn't a whole nother issue. But if inflation is the addition of new currency to our supply, and the government doesn't have the ability to create currency, then it isn't the government that's confiscating our wealth. Currency is created through two processes, and as we deconstruct them, it's important to establish what's old cash currently in the system and what's new cash being created. The first process is treasury bonds created by our government and open market operations by the Federal Reserve. To pay for its expenses, our government has two options: to use its income, revenue generated from taxes, or to borrow money, which it does by creating treasury bonds to sell to the financial industry. When these bonds are purchased, money is being lent to our government, and so these bonds represent our national debt. And since the government can never seem to balance the budget, our national debt continually increases. Now, the cash used to pay taxes, purchase, and repay these bonds is all done using old cash currently in the system. Now, the other option for paying off this debt is through open market operations. The Federal Reserve, to add liquidity to the market, will purchase them, eliminating them from the system. And when it does so, it's creating new cash.
When you or I write a check, there must be sufficient funds in our account to cover the check. But when the Federal Reserve writes a check, there is no bank deposit on which that check is drawn. When the Federal Reserve writes a check, it is creating money, putting it simply.
So if the Federal Reserve's purchasing of these bonds eliminates them, and they're doing so from an account that needs no money in it, why don't they purchase all of them and eliminate our national debt tomorrow? Well, because that's not what this system has been designed for.
If our nation can issue a dollar bond, it can issue a dollar bill. The element that makes the bond good makes the bill good also. The difference between the bond and the bill is the bond lets money brokers collect twice the amount of the bond and an additional 20%, whereas the currency pays nobody but those who contribute directly in some useful way. It is absurd to say that our country can issue $30 million in bonds and not $30 million in currency.
The purpose of this treasury bond system is to keep governments in perpetual debt to the financial industry. And if governments are using their income, our taxes, to pay for these bonds, the result is a harvesting of our taxes. See, in 1862, President Lincoln issued $450 million in U.S. notes directly from the Treasury. And in his words,
"The government should create, issue, and circulate all the currency and credits needed to satisfy the spending power of the government and the buying power of consumers. By the adoption of these principles, the taxpayers will be saved immense sums of interest. Money will cease to be master and become a servant of humanity."
See, if the government would create the currency that it needed to pay for its expenses, rather than borrowing it from the financial industry, without these bonds to pay for, we'd only need a small fraction of the taxes that we pay now, possibly none at all. However,
the death of Lincoln was a disaster for Christendom. There was no man in the United States great enough to wear his boots, and the bankers went anew to grab the riches. I fear that foreign bankers, with their craftiness and tortuous tricks, will entirely control the exuberant riches of America and use it to systematically corrupt civilization.
after his assassination, this currency was removed from circulation. And the only president after Lincoln to issue currency directly from the Treasury was President Kennedy. In 1963, under Executive Order 11110, Kennedy issued $4.3 billion in debt-free Treasury notes. 6 months after doing so, he too was killed, and this currency was removed from circulation. That's an amazing coincidence. The World Health Organization identifies bonded labor or debt bondage as a form of modern slavery. It's when an individual, employer, government, or corporation, through force, threat, psychological coercion, abuse of the legal process, or deception, compels an individual or individuals to work through the imposition and exploitation of a bond or a debt that is difficult, if not impossible, to repay. That sounds like a perfect fit to me. Now, the argument could be made that the Federal Reserve can't create the currency to pay off our debt, that this would add to inflation, that we have to take into account supply and aggregate demand and economic cycles, and all of these arguments might hold water, except While the Federal Reserve's not creating the currency to pay off our debt, it's allowing itself, the banking industry, to create a flood of currency through the second process. Fractional reserve and commercial lending is this narrative.
The bank always has on hand a reserve of money received from the stockholders and depositors. On the basis of these cash reserves, a bank can create credit. So besides providing a safe place for depositing money, a bank serves a community by making additional credit available for many purposes.
So the way this works is in step 1, you or I makes a deposit with the bank. In this case, $1,000. In step 2, a fraction of that deposit is held on reserve. And in step 3, the bank's authorized to use the other fraction to create the loan in step 4, and the bank credit is used to hold its place. Now the problem with this narrative is it can't be the same cash that the bank's lending. Otherwise, when you went to withdraw your deposit, the response you would get at the bank is, "We didn't think you were using that cash, and a very nice lady was just in here who needed a mortgage, so we kind of lent it to her. But here's some bank credits." And since that's not the case, the cash used to create the loan in step 4 and being given to the seller in step 5, this is new cash being created. I believe this is fairly well understood, and the reason this narrative works so well is the bank's not simply creating the cash to put straight into its pocket. It's being created when it's lent, and the good or service that exchanges hands in step 6 does help the economy to move and grow. The narrative finishes with the bank receiving the creditor portion of the loan in step 7, and in step 8, using old cash currently in the system, future payments are used to replace the bank credit with the bank earning interest on the loan. However, that's not what's happening. The problem is the moment it's created, the creditor portion of the loan in step 7 has an immediate value to the market. So what really happens in step 8 is that debt's securitized and through the back door sold to the secondary market for an equivalent amount of old cash currently in the system in step 9. And in step 10, future payments are actually used to repay the secondary market with a return on investment. And since it was really new cash being lent in step 5, the bank never really has to repay their 100% profit. So banks aren't making money on interest, they're passing along interest. The bank's making 100% profit from the sale of these loans day 1. To be perfectly clear, every dollar of every loan created under this narrative is a dollar of profit for the banking industry, which is only possible when they're created with new cash. And regardless of whether you're rich or poor, whatever race, gender, or nation that you're from, the next time that you get a credit card, car loan, mortgage, or loan for your business, and head home to spend the next 5 to 30 years of your life working to repay that loan, the banks realized 100% of your effort. They're realizing 100% of our blood, sweat, and tears before we've even left the bank. This is how our financial enslavement is occurring.
The modern banking system manufactures money out of nothing. The process is perhaps the most astounding piece of sleight of hand ever invented. Banking was conceived in inequity and was born in sin. The bankers own the earth, take it away from them, but leave them the power to create money and control credit, and with a flick of the pen they will create enough deposits to buy it back again. However, take it away from them, and all the great fortunes like mine will disappear, and they ought to disappear, for this would be a happier and better world to live in. But if you wish to remain the slaves of bankers and pay the cost of your own slavery, let them continue to create money and control credit.
If I owned a storage facility and were to rent you a unit, would either of us assume that it was okay for me to use all of your stuff? That I could lend it to my friends or use it as collateral for a payday loan? Of course not. But per the Federal Reserve Act, here in the United States, we've agreed to this foundational principle of the banking system, that our money is theirs to use. And it's this consent that enables the sleight of hand. The slavery that Stamp refers to is not metaphorical. Whether we know it or not, we've agreed to our very real modern day financial enslavement 100% reserve lending doesn't solve this problem. 1,000% wouldn't solve it. Now, it would turn our financial system upside down. But what would solve this problem is if we stop agreeing to this and we were to implement a new universal law stating,
you cannot lend a unit of currency that does not already exist, meaning it is not created by your lending of it, and you do not have the explicit authorization to use, meaning you cannot use or claim under a false narrative to use money that is not yours.
To all of us living by this unwritten law, this sounds like a no-brainer, but that's not the case for the banking industry. Now, this is infuriating to say the very least, especially since it's such an easy manipulation for them to achieve. But there's actually a bigger problem. Creating currency this way is unsustainable, and doing so threatens the health of our entire financial system. Here's why. This equation is a logistics map. It's used to model population growth in complex biological systems. And the way it works is xn is a starting population times the growth rate times constraints of the environment. Whatever environmental mechanism is constraining the population, food, predator, competing species, equals ending or future population. You can apply this equation to our supply of currency by measuring its growth and determining what's constraining the supply. This is our M2 money supply, and since 1980, it's been increasing at a rate of 12.5% compounding annually. Currently, it's 27 trillion, and 244 years from now, the age of our country, continuing at that rate, this number will be 82 septillion. Now, big numbers don't mean a whole lot to us, so to compare, a $1 cup of coffee today would cost just over $3 billion. That's an unsustainable rate of increase, but it doesn't explain where the money's coming from and what the underlying problem is. When this loan's repaid, either through its payment schedule or refinance, both sides of the debt are eliminated. The secondary market's repaid with a return, the bank keeps its 100% profit, and the new cash created from the transaction remains in the system. Repaying this loan doesn't remove the cash from circulation, so we're creating currency as the waste or byproduct of transactions financed by the banking industry. And although it's credit and debt that get blamed for much of our problems, it isn't all of the car loans from 1913 that are polluting our financial system. They don't exist anymore. It's all of the currency from all the transactions financed by the banking industry that's polluting our financial system. So what this 12.5% is as much credit as the banking industry can create. They're very creative. So what constrains new currency? Well, you would think that would be monetary policy. However, in 1948, Warren Weaver asked the question,
how can currency be wisely and effectively stabilized? To what extent is it safe to depend on the free interplay of such economic forces as supply and demand?
72 years later, monetary policy is still a conversation about supply and demand. And honestly, a monetary policy not addressing the flood of money pouring into the system feels more like a misdirection than a sincere intent to stabilize the system. Either way, monetary policy doesn't address the new currency created by the banking industry. Banking regulation does. And the Bank of International Settlements, the central bank of central banks, really only addresses leverage, mainly because when you're simultaneously creating all of the new currency with debt, you're the only one with enough money to buy it all. The original intent of the fractional reserve was to prevent bank runs on cash. It wasn't designed to constrain the amount of credit and in turn currency that the banking system could create. And since they're immediately able to recover 100% cash reserve on deposit from the sale of the loan, it doesn't. So the amount of new currency being created is unconstrained, and there's only one mechanism that removes old currency from the system. Through open market operations, the Federal Reserve both buys and sells government bonds. When it sells them, the financial industry purchases them with old cash, removing it from the system. The problem is that they're government bonds, so we get to pay for them. And it's impossible to generate enough taxes to offset the amount of currency created by fractional reserve and commercial lending. The result is a supply of currency growing from as much credit as the banking industry can create, constrained by monetary policy and banking regulation, not addressing the problem, equals an unconstrained supply of currency. This system's very effective at confiscating the wealth of countries and populations, but without an effective mechanism to constrain the supply of currency, the system will fail. So where do I find hope for the future of our financial system? Well, our financial system is an organized system of complexity, and by nature, it's unpredictable. But it's been proven that one variable, one solution, has the power to change the entire system. Our wealth stolen and our entire financial systems controlled primarily through the control of one variable, the creation of new currency. And of all of the infinite number of variables that we can't change, the one variable that we can change is how currency is created. I believe if we can solve the problem of how currency is being created, the entire system will change for the better. How do we do it? This isn't an option. Our world's speeding up, and as it does, problems with obsolete systems present themselves more quickly and more clearly than ever before. I personally believe that the everything bubble's actually the result of how we're creating currency, and the virus provides the perfect opportunity to redesign a system that was already failing. Either way, the result of this system is a supply of currency that's increasing exponentially. And the nature of exponential growth is that it's unsustainable. One thought on our expectation of exponential growth. I always love the quote from Einstein, "The most powerful force in nature is compounding interest." Until I learned, he never said that. When asked what man's greatest invention was, Einstein's response was compound interest. Now, I certainly can't prove which of these is true, but I believe Einstein was smart enough to realize that compound interest doesn't exist in nature. Nature doubles, which is when 1 becomes 2, 2 becomes 4, and this can be found everywhere in nature. Banks compound, which is the equivalent of using a doubling rate, but at the end of every year, taking your total and starting the process over again. The only place this may be found in nature is jumping out of an airplane, because what compound interest is constant acceleration. Now, I understand why people want to earn it, but physics proved that compound interest was unsustainable years ago. Now, doubling and compound interest are both constant acceleration and exponential growth, but what I'm suggesting is that perhaps our expectation of exponential growth is the result of the banking industry's use of compound interest, which we believe is unavoidable or a natural consequence in our financial system because it's rooted in nature. It's not. Compound interest is completely man-made. Either way, the math is very clear. If we continue to exponentially increase our supply of currency, the total volume and inflation will explode at some point in the future. If we continue to do so, we are knowingly passing the buck to future generations. This is literally the definition of unsustainable. This plan, as it relates to currency, is to replace the US dollar as the world's reserve currency with a basket of fiat currencies created by the international banking cartel, and a new monetary policy per the global elite. This is a terrible idea. Nixon taking us off of the gold standard in 1971 is often blamed for our money problems. This is either a very effective misdirection or the result of an intentional misunderstanding of how currency is created. The belief is that gold was constraining our supply of currency, but our problem started long before 1971. As far as gold as a solution,
Gold and money are separate things. Gold is the trick mechanism by which you can control money.
as Edison implies, control the thing backing money, control the money, which would apply to any precious metal or commodity. Not to mention, gold's got a really bad track record historically. Either way, gold's not the answer. If a president were to finally accomplish what both President Lincoln and Kennedy both set out to, this would be an unimaginable victory for the United States and possibly a catalyst for the world. However, when President Jefferson said,
"The issuing power of money should be taken away from the banks and restored to the people to whom it properly belongs."
he meant government. But right now, does it feel like restoring the issuing power of money to the government would be restoring it to the people?
"Let me issue and control a nation's money, and I care not who makes its laws."
Should anyone have this power? What I love about this option is it opens the door to three possibilities. Is it safe to assume that the best solution for how currency is created is going to come from those in control of it? Like the taxi industry had no chance of stopping Uber. If an undeniably better alternative to our financial system were to present itself, perhaps we could solve our own problem. Currency is an asset however it's created. And even though our government isn't actually creating currency, what's meant by our debt-based system is the two processes used to create currency do so with the creation of debt. Bitcoin, for example, uses a process to create an asset used as currency independent of debt. By using an independent process to create the asset of currency, perhaps we can eliminate the manipulation of our debt-based system and simply create a quantity of currency at a sustainable rate. The diversity found in nature is not the result of Gaia giving the essential building blocks for life to a single species and asking, "Can you please distribute these fairly?" New life emerges everywhere on this planet and possibly the universe because the opportunity and source energy are provided to all. The problem is not that the banking system has all of the money. That's the result. The problem is its control of all of the new money. If we ever hope to have a diverse financial system that's free to move and grow organically, then new currency cannot originate from a single central source. Distributed ledger technology, blockchain, makes it possible to decentralize a process for creating currency. See, right now it's the banking system that has control of the creation of currency. But throughout the world and throughout history, it is and has certainly been governments and monarchies with this power. And every monetary system throughout history has failed and done so with one common denominator: us. We're the biggest risk to whatever process we use for creating currency. Distributed ledger technology makes it possible to remove us from the process. However, while it's inflation in quantity plugging our fiat currency system, it's inflation in value that's plugging digital currencies. Cryptocurrencies are primarily created either as an initial offering, similar to the initial public offering of a stock, or as a reward for securing a network, kind of like Visa, except it's a decentralized network so anyone can get paid for helping. So far, these processes result in an arbitrary or insufficient quantity for an entire financial system to use as currency, and to meet the need or interest of users, an exchange is used, resulting in a value that looks like this. So how do we solve these problems? With what process can we expand our supply of currency, constrain the total quantity, stabilize its value so an entire financial system can actually use it as currency, and protect the process from ourselves? I truly believe that finding the best answer to these questions is the key to collectively freeing our financial system. This is one idea for how together we might accomplish this. The name for how the universe expands is scalar expansion. Time and money are both scalar quantities. And when you correlate the scalar expansion of two scalar quantities, the result is a scalar ratio. Now, one important characteristic about scalar expansion in two dimensions is that it's not an exponential increase. 1 becomes 2, 2 becomes 3. And if we were to correlate the scalar expansion of our total supply of currency with the scalar expansion or displacement of time, the result would be a constant rate of expansion for our total supply of currency. This sounds like a very fancy explanation for increasing our supply of currency at a constant rate, which I'll explain. But what this solution proposes is to both expand and constrain the supply of currency through the use of a constant rate. And I wouldn't be the first to suggest this. Milton Friedman was a proponent of using a constant rate. But who should be in control of this new currency? The banking system and governments should continue to decide how to spend it and who to give it to, keeping in mind that the US government is not in control of new currency now.
Whoever controls the volume of money in any country is absolute master of all industry and commerce.
Whoever or whatever controls the volume of new currency created for our system controls the system. So how could we fairly distribute new currency to 330 million, possibly 7.8 billion people without the process being at risk of control by a central authority or being used as control of the population? There are two options for fairly distributing our new currency free of manipulation and control. The first option is the people, which will require a decentralized process of evenly distributing the new currency to 7.8 billion people, taking into account a constantly changing population and somehow accomplishing it without government involvement or central control, which maybe that's possible. The other option is the money itself, which I believe is completely possible. When you apply a scalar ratio to each individual unit of currency or the total supply, the result is the same. So we could achieve an intrinsic expansion of our total supply of currency through the expansion of each individual unit. And with money moving throughout our financial system, how can we possibly accomplish this? Well, other than the cash under your mattress, all money lands in a bank account. When I buy something from you, the money goes from my bank account to yours. And when you invest your money in Wall Street, your money's not on Wall Street, you have a stock. Your money's in his bank account. And if you think I'm going to suggest that we accomplish this with bank accounts, maybe start the video over. Blockchain. We're already using a digital system. What most money is ones and zeros on a bank server. What digital currencies are time-stamped quantities on a distributed ledger. If we time-stamped our quantity of ones and zeros on a distributed ledger, using the simple equation original time-stamped quantity times scalar ratio times displacement of time equals future quantity of currency, we could achieve a decentralized intrinsic expansion of our total supply of currency at a constant rate. It wouldn't matter whose currency, how much, or where it was in the system. The expansion would be uniform and constant, occurring where most money lands anyway, except not a bank server, a distributed ledger. This is different than cryptocurrencies in that there's nothing to buy. The initial offering would be zero because the account's created with its deposit. And no process really, just time. The potential total quantity would be all fiat currencies in existence, and potential future quantity would be that number increasing at a constant rate. The value would be stable because you wouldn't pay more than $1 for something that you could create for $1. For the same reason, you wouldn't need an exchange. The only question would be, how much currency does the world truly need? Meaning, what constant rate of expansion should we use? Freeing ourselves and our financial system is a three-step process. If the banking system and governments continue to create currency the way they are now and have in the past, our financial enslavement does not end. They'll continue to undermine the health of our current system and risk the success of any future effort at building a better one. But in order to continue doing so, they need our continued consent. A decentralized intrinsic expansion of our total supply of currency using a scalar ratio is one option. But we need a new, sustainable process for creating stable currency safe from ourselves moving forward. The idea is not scarcity, nor is it to destroy our way of life. The idea is for the world to be the better place that Sir Josiah Stamp suggested. And if we're to stop creating currency with debt, then we need innovation focused on the creation and management of credit without creating currency to accomplish it. But what's exciting is this innovation's already happening. Blockchain, digital currencies, decentralized finance, and smart contracts have all accomplished some amazing things. But further innovation's been stuck mainly because we can't innovate with this. Currency itself increasing in quantity, not value, could help with this. And to explain how, I think of game theory, a zero-sum game in particular. Now, an important assumption of a zero-sum game is a closed, inelastic universe, which assumes that all players start with all the resources they'll ever have. However, this doesn't exist in our economy, because the most important resource that we have, time, is always expanding. Cash, on the other hand, at the rate it's being created, starts dying in value the moment that it's born. Because of this, for growth, we trade cash for other assets like stock, or we use it for down payment to offset risk when purchasing a collateralized asset. Rarely do we use cash as collateral, but if cash itself were increasing in quantity with the passing of time, then we wouldn't want to trade it for an asset inflating in value on any exchange. And if time changed the quantity of currency, then we could actually collateralize the future expansion of cash. It would go from being one of the worst forms of collateral to possibly one of the best. And in some cases, a better form of collateral than the asset being financed. It could be the key to bankless person-to-person finance transactions. Or better yet, bankless government and citizen financed relationships. I have no doubt that all of our finance and economic models will evolve. They have to, but in the direction of collaboration rather than competition, which in nature is a very successful model. Certainly don't take my word for it. That if the banking industry and our old methods for creating currency and credit are to join the taxi industry, then we need an alternative that is undeniably better. And if all new currency expanding from the supply itself at a constant rate is not the key to freeing our financial system, I will keep looking. I think it is.